So take a look at who has sold the holding for GMM Pfaudler and who has purchased it. I had sold my entire holding of HDFC, but right now what is happening is that all the pharma companies, for example, Dr. Lal PathLab. Hi everyone, welcome to today's video. So there is some bad news that is coming from China in terms of the prognosis of COVID. The COVID cases there are rising quite fast and the world is getting worried that will this spiral into another major crisis that the world has already witnessed in 2020 and 2021. Even the Indian government seems to be a little bit worried. Even they have issued precautionary guidelines. So the situation seems a little bit grim. What type of impact will this have on the stock market? This is precisely I'm going to analyze today. On top of that, I'm going to talk about that what kind of impact will this COVID situation and the first half of 2023 might have on separate sectors and industries. For example, where is the Indian banking sector currently standing and where is it likely to go in the first half of 2023? So I will do a macro analysis of different sectors and industries, and along the way I will discuss a few stocks. This is not a stock buying selling recommendation video that I'm making. I'm simply using some of the examples so that you can understand the entire picture and story better and factor that into your decision making. So with that said, let's kickstart our video, and the first topic that we will quickly understand is that whether this emerging COVID situation across the globe, is it going to derail the stock market? Simply because of the fact that today, as I'm shooting this video on 21st of December, the stock market in India fell quite aggressively. So is this situation going to continue? So for this, let us study the COVID data and how it has risen in the past and what type of impact has it created on the stock market. So this data is publicly available, and what you will see is that during this phase from 2020 all the way till the start of 2021, the stock market first corrected quite aggressively, be it the Indian stock market and the US stock market, and then it sharply rose. So this is how the first wave of COVID impacted the stock market. Why did the stock market go up in this phase one? It was simply because of the fact that the governments decided to print a lot of money. Then came the second wave, and this was a major wave that impacted different parts of the world. And here the stock market corrected quite aggressively, be it the Indian stock market and the US stock market. And this stock market correction phase lasted all the way from November of 2021 all up until July of 2022. So during this 6-7 months period, the stock market corrected quite aggressively both in India and the US. And if you zoom in on the COVID data, you will clearly see that the cases started going up from October of 2021 all the way, and they peaked somewhere in January of 2022. And after this peak was made, there was a massive correction in the stock market. So what about this phase 3? This phase started from May and July of 2022 and it lasted all the way till July. So there was a 1-month period when the COVID cases started rising. What impact did it create on the stock market? So let us quickly revisit Nifty 50 levels, how it behaved in the July of 2022 and thereafter. So you can clearly see that the stock market actually started rising from July of 2022 all the way till September of 2022. So this is very interesting because in phase 1, phase 2 of COVID that I showed you, the stock market generally fell, but the recent phase 3 that happened, the stock market was inversely related to the COVID cases. Now we are somewhere in phase 4 and it is becoming apparent that this phase 4 is going to pick up in terms of COVID numbers. So let us have a very quick discussion as to what is going to happen there. So you can clearly see that there has been a spike in the number of cases from November and all the way. It is lasting as of now and a peak has not been made yet. So probably and hopefully the peak will be made very, very soon and it will not be a severe peak. Now, I don't know. I am not a COVID expert. Here is a commentary that I'm attaching. You can study it more and you can draw your own conclusions, whether it is going to be a severe wave, whether it is going to be a moderate wave, if some other new kind of variant is going to come, etc., etc. So I will limit my conversation to the economics side of it. Now, there might be a lot of concerns associated with COVID, but from an economics stock market perspective, there are 3 key points that you need to remember. So the first key point is that the COVID situation is not new. Yes, there can be new variant of COVID that can come in and it is definitely a grave situation, no doubt about that. But to cut the long story short, the implications of COVID has been absorbed quite aggressively into the stock market. This is called as factoring in of uncertainty. When COVID was extremely new, no one knew what COVID exactly could do, what could be the implications, etc. Then it could not have been factored in. But now, even if new variants come, the factoring in of COVID has been done quite aggressively. So this is point number 1. Point number 2, the governments have a roadmap. Now, India's roadmap might be very different from China's roadmap. China's roadmap of dealing with COVID might be very different from US. They might impose lockdown, they might not impose lockdown. I am no one to comment. But every government has their guidelines, systems in place, and they are going to follow that. So that thing is already clear to investors and stock market participants. Third and final point is that almost no country in the world right now can afford lockdowns. Economy is already fragile, if the government start imposing really harsh lockdowns, it can create a lot of panic. Second key related point is that many businesses, many people can't afford not to work again because they have stopped working at least for a little bit when lockdowns were imposed and they lost a lot of their savings. So they can't execute that from a financial standpoint. And even the governments understand it. So executing this lockdown this time around is going to be really, really tough. Now, of course, this is an evolving situation. I am no health expert, but even if we do a simple scenario analysis, there are two types of situations that can play out. Situation number one that can play out is that you get scared and you stop investing in the stock market even when the situation is conducive, everything's become undervalued. Right now, you can see that this market mood index, which indicates the sentiment of the stock market, it is towards fear. Now, going forward, as the number of COVID cases rises, this will move to extreme fear and people will be fearful of investing. Now, in scenario one, if you stop investing and if you don't execute anything and the COVID wave passes, then you would have missed a massive investment opportunity. Scenario two could be that, hey, you know what? The COVID just goes out of hand and it creates like massive havoc. So in that situation, what is going to happen? You do comment and let me know. According to me, what is going to happen is fairly simple, that the governments are going to print money. They are just simply going to print money. They will worry about inflation later. This is something that they did in the first wave of COVID when COVID was just discovered, and that is exactly the roadmap that they are going to execute. So in that situation, while you can't predict the bottom of the stock market, you can be rest assured that the stock market is again going to make a new height. So with this analysis out of the way, let us start the second part of our analysis, where I'm going to analyze individual pieces of investments that you could make. And let us start with Nifty 50 and its prognosis. So what you will see is that right now Nifty 50 has traded in this channel. You can see that it has touched this particular resistance line multiple times, and then it finally gave a breakout also, but it has started to come down. So this is where Nifty is currently trading. Is it undervalued? The answer is no. According to me, it is not undervalued. It is still fairly valued because it is still very close to its all-time high. Point number two that you would notice is that it is making something called as W shape. Now W shape is called as a bullish recovery pattern, and you will see this time and time again that when this W shape recovery happens, it is usually a bull run phase. So you can clearly see this, that this is where a W shape recovery happened. This was bullish, and something likely is going to happen here also, that this W shape has been formed and it is likely to go like this. Is it going to happen immediately? I don't know, maybe not, but this is a recovery pattern that we need to know about. Can we backtest this? Yes. So let me show you 2-3 instances where this has worked out. So let me start showing you some data from 2008 onwards, and what you will notice is that this is definitely a W shape, and you can clearly see that this is first instance where this type of recovery has happened, and this happened somewhere in 2011, 2012 also, that this was one W, this was second W, and then there was a massive recovery that took place. So now you will say that, okay, time to sell my house and invest all my money in Nifty 50 because W-shaped pattern has been formed. No, W-shaped pattern needs to be supported by macros, and unfortunately in the first half of 2023 the commentary has been negative. These are not my words, these are words of RBI. So please take a look at this article. There is a separate video that I have done in Hindi, and you can find the link to that video in the description box and pinned comment section. So please go and visit it, and you will understand why I feel that the first half of 2023 is not going to be dynamic. Does it mean that I'm bearish in 2023? No, absolutely not. I'm still bullish. But the first half of 2023 right now indicates that there is no major bull run that is going to happen in the first half of 2023. So now comes the natural question that, hey, is it a yes or no from your side to invest, not invest? Well, I don't give that commentary. In case you want to hear that type of commentary, you can consider joining the YouTube member section. Otherwise, if I publicly speak what I'm doing about a particular stock, then I get liable to be sued. So therefore, I've stopped giving my commentary that I'm buying, selling, this, that. So I'm not doing that at all. But I give very clear analysis on member community section. So one key final point that you need to understand about Nifty 50 is that right now it is trading fairly close to its all-time high. So it is not as if that this is available at a discount and you should sell your house and invest everything in Nifty 50. No, please don't do that, because we don't know what the situation in the first half of 2023 would be, and it would be prudent to wait and see how the first half of 2023 plays out. But on the flip side, if you do the exact same analysis for the US stock market, you will see that this is undervalued. So let me quickly share the data and then I will give you my commentary as to what I am doing there. Okay, so if you study S&P 500, you will clearly see that it is still trading at a discount from its peak and at a healthy discount. So there is a 22% discount associated with S&P 500 right now. Now, is that W pattern thing playing out in the US stock market also? Yes, which indicates that the markets are likely to give a breakout at a global level also and at our national level also. So you can clearly see this. So I will just draw a few patterns to help you understand understand it. So this is a very clear W pattern, and from here it's very likely that something like this will happen. Now something similar happened in 2016, that there was a very clear recovery here, and something similar is likely to happen here. So I'm aggregating S&P 500 and Nasdaq right now quite aggressively. Now I get a question that how do we do that? How do we buy Nasdaq and S&P 500? Which is the best platform? So I personally use Vested. I think it is a wonderful platform. You end up paying lower commissions also. So through Vested, you can buy S&P 500 and Nasdaq both. Now how to exactly do that? I will paste a step-by-step process in the pinned comment section. You can go and check it out. So next, let's talk about pharma stocks, because last time when the COVID crisis came, the pharma stocks gave a massive run up. Right now, the pharma stocks are trading at a discount also. So is it likely that due to this new COVID wave, the pharma stocks are going to give a massive up run? Well, I have mixed response towards it. I don't feel that they are going to give a massive run up because of this COVID situation. Some good pharma stocks are available, but right now what is happening is that all the pharma companies, for example, Dr. Lal PathLab, GMM, Pfaudler, bunch of other different companies that were directly into healthcare/pharma, they were assigned very high growth projections due to the COVID crisis. Those projections have cooled off. That is the simple thing that has happened with pharma stocks as of now. It is not as if that pharma stocks right now have become undervalued or massively undervalued. So this is the first piece of commentary that I wanted to give. In addition to that, there are good pharma stocks. Now I am just using GMM Pfaudler as an example. This is not a recommendation from my side to buy, sell. This is not a detailed stock analysis video. Detailed commentary I will do on the member community section, but I will help you understand how panic is created. So take a look at GMM Pfaudler. There was massive panic. It was trading at 1300 rupees. Then it suddenly driven above. Then it reached to almost like 2000 levels. Then it fell quite aggressively. So there is a lot of churning that is happening in pharma stocks right now, and people are panicking. I have gotten so many questions regarding GMM Pfaudler, so I'll just take a minute to explain it. So why has the stock price suddenly corrected? Well, because one of their lead promoters decided to sell their stake. Now news media keeps on showing you this type of stuff only. Now lead promoter sold holding, so your stock is going to go to zero, this, that. No, it doesn't work that way. Please understand that if someone is selling it, then someone is buying on the opposite end, right? So please try to figure out that situation and do some kind of fundamental analysis. And you can get this data very easily. So take a look at who has sold the holding for GMM Pfaudler and who has purchased it. So you can clearly see that this was the lead promoter. They placed a sell order of roughly 10 lakh shares, but who bought it? So Aditya Birla Midcap Fund, Sun Life Equity Fund, their Indus Capital Advisors. So all these are big DIIs, and they have purchased the stake that was sold. So then comes the natural response that, okay, then why is it that Pfaudler decided to sell it? Well, I don't know. There are multiple reasons why a particular company might decide to cut its stake. First and foremost, Pfaudler has not completely exited it. They still maintain a large chunk of equity. So from this article, you can categorically see that GMM Pfaudler promoter sells 17.3% stake. Okay, so they have sold some bit, but how much is it remaining? So you get the answer here, that post the transaction, the shareholding of Pfaudler will be reduced to 14.3% from 31.88%. So it is not as if that they have sold the entire thing and went away. So please understand business prospects. Please understand that who is buying and selling. Please understand the news and only then make buy and sell decisions. Don't sit and panic all day. So now you might have a natural question that, okay, does it mean that should I buy GMM Pfaudler? I am not going to give you the answer. Okay, now let's move on to the next set of stocks that we will quickly discuss. So let me quickly talk about banking and AMC companies. So for this, let me take you to the analysis of HDFC Bank. I have been one of the biggest supporters. I had sold my entire holding of HDFC a few weeks back. I had made the announcement in the member community section, and also there was a video where I announced it. But HDFC Bank I am holding. So let me quickly explain you the rationale behind it. So point number one is that if you actually study HDFC Bank from its peak, so it is almost trading at its peak. So it is not as if that this stock right now is deeply discounted. So this is point number one. Point number two, and this comes from RBI. So RBI governor has recently issued the statement that in the first half of 2023, the liquidity positions in the country will be okay, but the inflation will remain more than 4%. So what does this mean? It simply means that the credit flow through the economy is not going to pick up like massively. I don't think that HDFC alone or ICICI Bank alone will make a massive up move from this market. It is going to move directly in linkage with whatever is happening with the broad market. If Nifty 50 is going up, then something like HDFC will move move. But if the broad market is not moving, then it is highly unlikely that HDFC Bank will give a massive up move from this point. Now, very quick note on AMC stocks. I have been a believer in AMC stocks. I think a current panic can be created on AMC stocks the way it is being created on GMM Fodler, and the stocks can be brought down. But I see a massive rally ahead. Again, please go back and revisit the section of Nifty 50 analysis and Nasdaq and S&P 500 analysis, because AMC stocks or asset management company stocks, they work directly in conjunction with whatever is happening with the broad market sentiments. If the market sentiments become extremely bullish, AMC stocks are going to run like rocket. And if you actually study the performance of HDFC AMC over the last 6 months, it has improved quite aggressively. So it has given roughly 22% return in the last 6 months. So situation has improved quite aggressively in AMC. And if you had been aggregating AMC stocks when they were falling and investing more money, then you would already be in profit. So going forward, banking and AMC sectors are going to move in conjunction with market sentiments. So I don't think a major up move is going to come for the next 6 months from this point for these stocks. But after that, there is a very good chance that we might be in a period of sustained bull run and a lot of money will be made for investors. So the next sector that I will quickly speak about is the infrastructure and capital heavy sector. And I am bearish about this sector for a wide variety of reasons. There is an entire video that I had done on Adani stock analysis, why Adani stocks, because those are infrastructure driven stocks, mostly speaking. So I had given an entire commentary, and there was one central point that I explained, that right now the cost of capital in India is fairly high. For example, Adani's cost of capital is close to 14.5-15%. So they are borrowing money at almost 14-15% rate, so to say, but they are able to generate returns in tune of 5 to 6%. So there is a massive gap there. So this becomes a problem for infrastructure company whenever the cost of capital or cost of credit in the economy goes up. Right now, you might have noticed that banks are given very high returns on fixed deposits. Government securities, GSECs, are giving a lot of returns when you go and invest money in GSEC. What does this indicate? It simply indicates that the cost of capital in the economy right now is very high and money is very valuable. So to that end, I feel that there are some stocks which have become slightly overvalued. One classic case in point is Bharti Airtel. It has made its all-time high and it has started to come down. So I see these type of stocks correcting simply because these are capital hungry businesses and they cannot maintain the growth rate that they had displayed when the debt was cheap. Now debt is expensive and it will become problematic for all these infrastructure driven companies, especially if they are overvalued. Okay, so the final stock category that I will pick are small cap, mid cap, consumer durables stocks. Now I've picked a very big category. Basically, small cap and mid cap have already corrected quite a lot. So generally speaking, there has not been a massive recovery on small cap and mid cap. So if you can identify the right type of small cap, mid cap companies or consumer durable companies at this stage, there is a lot of money to be made. This is where I feel a lot of sector rotation might happen in this round of correction. Now, can I give you a couple of examples that I've talked about in the past? Yes. So let me give you a couple of examples. One is of V-Guard, and what you will notice is that from March, this stock has roughly given almost 53%. Now, so I have been an investor in it and I've been aggregating and building a lot of position from last November onwards. I got a lot of heat, but hey, this stock has started recovering and I feel that these levels are going to sustain. Now, should you pour insane amount of money in these type of stocks right away? No, you should not, especially these small cap, mid caps that have already given a run up. Let them cool off. If they don't cool off in the first half of 2023, then think about building more positions. But as of now, just wait and watch. But there are a few consumer durables that according to me are still undervalued. Now, one classic case in point is something like Whirlpool. So you can clearly see that the stock has never recovered. For example, in February of 2021 and up until now, the general trend has been falling only. So it has corrected by roughly 46-47%. Huge correction has already happened. But are the results so bad for Whirlpool? Okay, so let us take a look. So the net profits are still there for the company. The sales has generally gone up. It is not a sales problem per se. It's a profitability problem. Now, why has the profitability problem come up? I had made a separate video on that in consumer durables, what happened is that they ended up having a lot of unsold inventory. Now, these type of items have a lot of stocking cost. For example, if some shopkeeper has brought these items from Whirlpool and the items are not moving for a couple of years, it's a huge stocking cost that this shopkeeper is undertaking. So they will say, yeah, let us discount it at 50% and sell it off, right? So this becomes a profitability problem for consumer durable companies. Now, do you think that this problem is going to persist for a company like Whirlpool forever? I highly doubt it. So therefore, I'm bullish. Now, this does not mean that, hey, it's time to sell my house and invest all my money in Whirlpool. No, I'm not giving you any recommendations. I'm simply sharing my perspective. But I hope this brief analysis help you understand where investment opportunities are, what things you should be fearful of, what things you should not be fearful of. If you enjoyed this conversation, do consider liking this video and subscribing to the channel, and I will see you soon.